Why real estate, Matt? You had just mentioned prior to going on that you were with a group of cyber leaders that weren't even aware that real estate was an issue as it relates to business email compromise or social engineering or wire fraud. But what's leading to real estate becoming this top target now?
Yeah, I think that there's several factors at play. And so when I gave a presentation here in the DC area, 75, 80 really sophisticated cybersecurity professionals, it was a surprise to them how much real estate was being targeted. But when you think about it as to why, it kind of makes sense from the perspective of a cyber fraudster. The first is the open source information that is available to them to do their due diligence and to understand by the public nature of real estate transactions, whether it's websites like a Zillow, Realtor, all of those kind of things, but then also county records that are publicly available. So you have that, and it's been my experience targeting and investigating and prosecuting identity thieves, basically wire fraudsters, that they do a fair amount of due diligence and their own sort of like building of dossiers on targets. So then therefore they can answer knowledge-based authentication questions, and they can sort of inject their sort of their communications into emails and things like that. So that's the first part, is a lot of the information's out and available. The second is, because of the nature in which real estate is set up in this country, you have a lot of really small shops, mom and pop shops, owner operators that are their job, and there's a lot of empathy towards this, is to sell houses or to help somebody buy houses. It's not to be a cybersecurity professional knowing all of the ins and outs and how to protect your email. Probably don't even know that emails or username and password combinations are the most widely sold thing on the internet, or even understanding the importance of multi-factor authentication and using authenticator apps. And because there has not been a standard across sort of the industry, largely because of the bifurcated nature of which the industry leverages different components to get to a sale, it makes it difficult to sort of level up as far as protecting buyers and sellers along the way. And then also the old saying by Willie Sutton, after he was asked, why do you rob banks? It's where the money is. Well, there's a lot of money in real estate, and so therefore that's going to be a lot easier for fraudsters to target, because they're lazy and they would rather go after the larger paydays than sort of small increments that take up a lot of their time.
Just look at how cybercrime is shaping right now in the U.S. So cybercrime, all forms of cybercrime, wire fraud, ransomware, monetization of theft of data, romance scam, investment scams, $10 billion a year, which is reported. There's a bunch that's not reported, okay? So the number is actually much larger. In investment scams, or otherwise known as pig butchering, a lot of that's relating to cryptocurrency, is $2 billion. And then business email compromise, which we are closest to in real estate, otherwise known as wire fraud, is $500 million just in real estate. And those were stats coming from the FBI's Internet Crime Complaint Center last year. The other thing that's coming out are these raids on like cyber and slave camps, hustle kingdoms. I mean, there's some things here. I just warn you, if you go down this rabbit hole, there's some things you're not going to be able to unknow. It's a very, very dark part of what's going on in the world right now, where in third world countries, they'll put what looks to be a legitimate ad for employment, hiring well-educated and experienced individuals, just trying to level their family and their community up. And they'll go for an interview, get put in a room. HR will come in asking for their passport and other form of documentation. They take that, and then the ruse is, comes to light when they say, we're not giving your documentation back, and you got to come with us, because they put them in these enslavement camps to run cyber crimes at scale. And they'll use just very inhumane conditions and tactics to get them to do what they need to do.
In addition to that, not only do the fraudsters have the capability to do it on their own, they want everybody to have the capabilities of doing these things, right? So they're creating websites, they're creating places that you can actually go and make your own fake ID for $15. And unfortunately, I even had a member of my family recently that had something similar happen to them, where somebody filed their taxes on their behalf, and like they were able to falsify these documents. And I don't know if these types of tools were being utilized, but we know that it's as easy as going shopping online for fake identities as it is to go shopping online for, something on Amazon to send to your house. And so it's just the unfortunate reality of where we're at right now. And we believe it's our job to inform you and let you know that these things are available to the everyday consumer. And therefore, I think it's getting people excited about like, well, wait, crime could be easier than I thought, or maybe I can create a fake identity, and then, who knows, and becomes a slippery slope for folks kind of doing this that aren't just the, mass market criminals that we know. It's actually kind of bringing it down to enable just about anybody to create fraud. So Luis, with that, I'll turn it over to you to sort of go a little bit deeper on some of these and what the images look like, and give people a taste of what they're up against.
Yeah, totally. No, that's a great point. I mean, it's like, what's the term? It's crime as a service now. So it's, unfortunately, there's unsavory entrepreneurs out there trying to make a buck on this stuff. And just as it's, AI is making it easier for, graphic designers and developers to build things quicker, unfortunately, it's also bridging that gap for anybody who might not be interested in doing something reputable and can have access to these tools online. And so, it's definitely a new world, and it's definitely a lot of it is unknown, and we just have to keep watching and understanding what's going on. But there's tools out there like Ghost GPT, for example, which is trained on cyber criminal data, and it's available to cyber criminals. And this allows criminals to, just like you can put in a prompt into ChatGPT and get a lot of valuable information, you can also do the same thing and get information on how to defraud or generate images. And so I'm going to walk you through a couple images here of things that we've seen and are becoming more and more high quality. And so what we have here is essentially fake IDs and images of fake IDs are a lot easier to create. So what you have here is a 100% fake generated image. But as you can tell, this is something that you would that looks like something that you would do in any of the apps that are currently available for identity verification, even ours. So this is you see the ID, it looks real. You have all the markers on it. It's even kind of laid down on some carpet. This is all fake, but easy to generate on a prompt. And so this might fail some systems, but if, for example, you're a title company that doesn't have an ID verification tool and you get this over email, you might trust this because it looks very realistic, or you might wonder if how hard this would be to fake. But unfortunately, as we know now, it's becoming a lot easier. And so these still images are one thing about IDs, and they can get deeper. And so, for example, here's a little bit of more of a combination. We have a real ID, a generated ID here, 100% generated. And then we have sort of a generated image, even with a marker on the person's neck. And so you can kind of imagine, you can say to someone, hey, put a date on a piece of paper and take a picture for me to make sure that it's you. And so that used to be maybe a safe way to get someone to cooperate with you and make sure that you maybe pulled up today's news, or you wrote something on a piece of paper. Now AI can actually generate that. And so that's the scary part, is that a lot of these more manual tactics are actually becoming a lot easier.
This one got me, like when we saw this floating around on the internet, because I don't know if you've ever rented a car from like Turo, but you rent a car from Turo and they ask you to do this. They're like, hey, as you're picking up the car, like take out your ID and take a photo of yourself holding it. So like I've done this for other services that I've utilized before. But to think that somebody can not only create the fake ID, but the fake image of the person holding it and make it look like it happened like on that day or in a specific space is just, it's crazy.
Yeah, for sure. And we know, like not so long ago, we thought that AI couldn't do text, right? It couldn't do these things, or couldn't do fingers and all that stuff. But it's been, 6 months since then, and now we know it could generate pictures and text that look real. That little picture on her neck looks real, like she wrote it. And so it's just it's only going to get better and scarier here.
So quickly, just some numbers to share that we haven't shared in the past. We did some research on what's the size and scope of check fraud? It dwarfs wire fraud. It's not even close. The size, the scope, the impact, almost a 400% increase in check fraud since the pandemic. This is a stat that is very unique to any other form of payment. 65% of all businesses, this isn't just real estate, this is like all businesses have some attempted or actual fraud. We had last week, our bank alerted us that some folks were mimicking checks of Sun Title, our agency, and trying to deposit them, pretending that they were sellers in a transaction. We had a Craigslist scam going back several years on the East Coast. It was multiple checks trying to be fronted. So I think check fraud is, in a lot of ways, we could say, hey, that's like old school, more antiquated. They're more prolific. They're smaller numbers, but a much more frequent type of attempt. And that's, I'm going to knock the check off and write my own check. I'm going to take the account credentials and create a whole new persona synthetically, or I'm just going to try to cash a check. Like, I'm going to act as the payee and I'll try to cash it. And I can tell you from experience, our wire fraud that ultimately created CertifID started with a check fraud. So we took a check in. It was a certified check. We had deposited it into a financial institution, a very large financial institution. We were given assurances by our business banker that it had cleared, and we wired funds off of that check, which ended up being an earnest money check. And why we were asked to wire it was because it was a kind of a distressed asset sale. This is back in 2015. And lo and behold, the wire went out, the check bounced, and we were out $180,000 in an instant. So, but it's advanced even further than that. So this kind of left side, right side comparison, the check looked absolutely official. So I'll work through our example. Like, it looked really, really official. And we were given assurances that it had cleared. 1 to 3 business days, I don't know. I think it can be longer than that, actually. And I think some of that depends on the size of the institution and the jurisdiction where it's clearing through. So in our case, it was deposited in West Michigan here in Grand Rapids, and it was trying to clear through Idaho or Montana, and much longer than 3 business days. And that is that window that they exploit, because digital payments are immediate. Check has to fully clear the reserve. And I would argue that a cashier's check really doesn't clear any quicker than a starter check if you walked in and got a checkbook these days, as if anybody does. I don't know. And then the cashier's check, I mean, the verification is like very opaque because there isn't a consistent standard in the Federal Reserve or FinCEN or any of the clearinghouses as to like what are the protocols. So when our business banker said, yeah, don't see any alerts or holds on it, man, you're good to go, rock solid. Well, what were they missing, right? And how would they lead us down that path to such a crazy end? Let's talk about what's at stake. And I think of this as our risk profile, but kind of size of the prize for the scammer. And this is why I think we're going to continue to really have to be intentional and address this in each and every payoff and file. So every year we do a state of the wire fraud report. We push it out typically Q1 of each year. Roughly half of all reported fraud cases last year included payoff fraud. It continues to be the most prevalent. It continues to be the largest risk profile that faces the title agency and title industry communities to date. There's not really a close second. On the consumer side, it's the buyer cash to close. But the mortgage payoffs continue to just really strain the industry. When you think about the scale of risk, so I did some recent research yesterday, think about these numbers. So On the seller net wire, we'll have roughly 4.7 million homes that are sold. There's a little over 200,000 of net equity on average in each house. So we as an industry are going to transfer roughly $1 trillion just on home sales. I'll get to cash out refinances in a minute. Just on home sales, we need to safely transmit $1 trillion this year from our escrow accounts to sellers, okay? Mortgage payoffs, right? So you got a purchase money, you got seller with an existing lien. This is not, again, this is some refinances, but we're about ready to move into a whole different scale. We'll have 1.3 trillion in mortgage payoffs that we have to safely administer the risk on, right? So we're getting the new purchase money or refinance funds in. We got to fully settle and disperse out the existing lender. That's 1.3 trillion. So 2.3 trillion on a regular disbursement cycle that this industry is going to manage. If you think about the risk profile, so this is what concerns and fascinates me. There's a 100-to-1 risk ratio based on the average revenue generated versus the dollars that are being held in escrow. So for every $100 that's being held in escrow, the title industry really only generates $1 of revenue. So the risk profile is 100-to-1. You can say, okay, that's an interesting number. That sounds scary. Is that high or low? It's actually pretty high. So title insurance is 100-to-1. Credit card payments are 450-to-1. But again, that's kind of a black box. That's between credit card and merchant transfer, right? The clearing houses, that's even further black box because that's institution to institution. Banking and depository flows are 150-to-1. So we're approaching the level that we have the same risk profile as banks. But I'll get to why I think our risk profile is higher. But auto insurance, your homeowner's insurance, 1-to-1, maybe 1.1-to-1. And then the fees are what carry and the interest carry for that industry. Why I think it's the 100-to-1 has more impact than the 150 on the banking side is that every touch point for us is a Main Street touch point. We're dealing with the buyer, we're dealing with the buyer's agent, we're dealing with the mortgage lender, we're dealing with the seller and the listing agent and the mortgage servicer. Where on the banking, a lot of those are bank-to-bank transfers. And they're not holding other people's money in the sense that I'm responsible, I have true custody and control, and I'm responsible as a title agent for vetting and releasing that money. The bank contract reads very different. It's your account, you're responsible for vetting, and if you release it, we just administer the rail to push or pull money depending on where you want to receive or send it, right? And I think it's staggering, and it amounts to, and I've said this many times, an underpriced self-insured risk. So if you haven't done this and you're approaching renewal on E&O or cyber, or you have an upcoming renewal in the next few months, dig out your policy and really take a look at what you may or may not be insured for as it relates to wire transfers. Most will have something called a fraudulent instruction rider, an electronic funds transfer rider. Something will hang alongside of the E&O policy that will provide requirements for you to administer a callback. I'm going to read some of those right now because I have a summary from my insurance policy from the title agency perspective. And then we'll sublimit coverage down to typically $250,000. So from the policy, I won't read all the language, but it basically says, here's this, to have coverage, somebody needs to essentially call back and document using a phone number to a legitimate party, and it must be obtained by independent third-party sources such as the internet. And the conversation, the confirmation, and verification of the wiring instructions, mailing address, and the method used to obtain the phone number must be documented each and every transaction. So not only do you have to go out and independently verify who you're going to call or the address where you might send, I don't know, a carrier pigeon or a letter to, I'm not exactly sure. Most often it'll be a phone call, and then you have to document every single time how you obtained it and then what was the response on that verification. That's challenging. We've heard E&O companies that the title company administered the callback but didn't document it, and coverage denied. So just be really, I would say, wary of that, and make sure that your operating procedures line up to what your insurance companies may be requiring. Again, you introduced yourself, but I want to underscore this because you sit in this seat and run the team that is the first call that they're making on their worst day. Like, you're the tip of the spear for our fraud recovery services division. So I just want to underscore, Nate is dealing with victims and victim impact and victim intelligence around wire fraud on a 24/7 basis, because I get the emails as well. I mean, we know this is a 7-day-a-week job, right?
Yeah.
All right. So with that, I didn't mean to interrupt. Tell us about the transaction.
No, and I appreciate that, right? And again, this is really exciting for me to get to share with you all kind of what this looks like in the next step, right? We all have heard wire fraud. I don't think anybody in our industry, is unrelated to this or doesn't understand the types of transactions that are targeted or the ways that fraudsters are, stealing the money and who they're impersonating. But this is going to uncover the challenges of recovery and really, again, kind of peek behind the curtain at how these funds are moving. So the transaction here, this was a home sale of a house in Fort Myers, Florida. The house you see here in the picture sold for just over $400,000 in August of 2024. The title company, also in Florida, came to me in September after having wired funds to a fraudulent account, and we're going to break that down for you. So how this fraud actually occurred, and some of you are going to be familiar with this fraud type. This was a mortgage payoff for $252,000. What happened is the seller received the settlement statement and forwarded over to the title company. Unbeknownst to the title company, their closer's email was compromised, right? And what happened is within that closer's email account, there were auto forwarding rules created. Rules that said, hey, any email with the word payoff in that email, delete it out of closer's inbox, forward it to Fraudster. Fraudster then manipulates the contents of the email, or in this case, manipulates the attachment, and then reinserts it in that closer's email. So from the title company's perspective, this looked like it came from the legitimate seller's email address, right? Includes phone numbers for validation, includes wire instructions. Nothing looks out of the ordinary. And so the title company takes this, calls the phone number on here, and validates those instructions. Well, what they weren't aware of and what they didn't catch is that this was altered. Right? On the statement here, you can see two things. Number one, in the middle there in the seller line, Stan, our money mule, was added as a seller on this property. Okay, so Stan's added, and there's additionally a phone number provided for convenience to validate the instructions on this payoff statement. Right? So again, everything looks legit. This comes from the right email, comes at the right time, just a 30-minute delay, and it has all the information for validating those instructions. So title company receives this and proceeds to wire $252,000 at the end of August to what happened to be a fraudulent account. Right, so this is where we're going to begin to follow that money.
I'll put my title owner hat. For those of you that don't know, I also own a large title agency in Michigan. What terrifies me about what Nate just said was this was a full email compromise of what we believe is the escrow officer's email account. Did I have that right, Nate? So
correct.
They pull it out, they have the forwarding rules, they drop it back in, and it's not like this was an updated payoff. The new payoff sat in a pre-existing inbox, let's assume it was Outlook, and then they pick and pull that after closing and send it off. They run their verification, but the verification is saying, hey, the payee is different and the phone number is different, but they're not looking because they probably deleted the prior one in the string. This is unrelated to the other type of scam where they update it and then we're verifying and updated where something had changed. And I know this one's much harder to detect because it's sitting in the title company's inbox. So,
and what's
right,
fascinating about this specific title company, right? We're going to portray and kind of walk you through this $252,000 payoff. Because of that inbox being compromised, this title company in total lost over $700,000, right, across 3 or 4 different payoffs because they weren't able to catch it, right? It takes, about a month for a payoff fraud to be caught because that seller gets a message that, hey, this hasn't been paid off. They call the title company and say, what's going on? And then we finally identify it. But this is a lot different than some of the other fraud types where, same day or next day, hey, I didn't receive the funds I was anticipating. So this is just one of the transactions. And as Tom said, this vector of payoff fraud is incredibly challenging to identify and can be extremely damaging.
Well, I call it going back to the well. If they know there's a vulnerable, how many times, Nate, have we dealt with victims? We dealt with one. I won't name her, but she was on one of our sessions last fall, right? Where same deal. Hey, I just learned of a payoff. I go back to the last 6 months of payoffs or the last 90 days of payoffs, and what she thought was a single incident $300,000 issue was just under $1 million of exposed liability. We've had so many instances of that. If you don't take anything else away from this, when you uncover a fraud, especially mortgage payoff, you got to go back, you got to go up funnel. And I would argue you need to verify and make sure everything's settled like the last 90 days on payoff.
Yeah.
Like there will be likely something in there. So, all right, Nate.
Absolutely. Yeah, let's walk through the money, right? So Stan receives the $252,000, right? Title company sends out the payoff. It goes to Stan's fraudulent bank account. Well, let's start with the bulk of the transaction and the bulk of the funds that Stan distributed, right? So Stan is instructed upon receiving that $250,000 to first send out 4 cashier's checks to 3 individuals, right, to launder these funds to additional money mules. So we've got Dennis in Indiana. He receives 2 checks for $35,000. Karen in Michigan receives $65,000. Karen was very quick to cash that in about 12 hours, we found out. And then we've got Theodore in California, and Theodore receives a check for $75,000, right? So this is the initial transaction, right, to chop this up, move it to the next account, again, laundering these funds. And I want to dive into Theodore here because this is probably the highlight and the star of this story and really, again, helps frame who these money mules are, right? Tom walked through, there's witting and there's unwitting money mules, and Theodore here is a witting money mule.
Now remember, Stan was instructed by somebody to send $75,000 to Theodore. I want to be very clear. So Stan's our initial money mule, and then he's essentially following instructions on, like Nate said, bust this thing up into packets. These happen to be cashier's checks. Sometimes they're crypto wallets. Sometimes they're gift cards. Sometimes they're subsequent wire transfers. But yeah, Theodore would essentially be the second leg down on the money mule chain.
Yeah, and we'll talk about the reasoning that toward the end of why they're laundering the funds in these ways and the challenges that law enforcement face due to this type of movement of money. But right, Theodore's our money mule number 2, right? The second degree money mule. So Theodore's home address, 27043 Drive, right? That's his home address. However, Theodore instructs Stan to send the check to a different address right down the road, right? Send it down the road. I'll pick it up there. Well, why is Theodore is hiding this activity, right? Theodore is one of our witting money mules who is hiding his money mule activity from his wife. Unfortunately for Theodore, Stan makes the mistake of actually sending this check to his home. And it turns out Theodore's wife, Michelle, is home, and she's the first one to grab this check, right? So Michelle grabs this check for $75,000, asks her husband, Theodore, why did we get this? Theodore looks at her and says, I don't know. I don't know why I got this. I don't know why my name's on this check for $75,000. I'm assuming Theodore has had some really great bonuses in the past couple of years, but he decided to kind of cover this one up and say, hey, I don't know why we got this. So this is Theodore's wife. Received this random $75,000 check from Stan, has no clue why it's there, and being the good citizen, the good character that she is, unknowing that her husband is a completely different actor, writes void across this check, and then writes this letter back to Stan and sends this check back to Stan saying, hey, I've enclosed this cashier's check. I have written void across it so it can't be cashed. please let me know when you receive it so I can stop worrying about it. I would really like to know how you got our name, address, and how a mistake like this could have occurred. Right? Absolutely fascinating. Tom, I see you smiling. This is, again,
it's
the
absolutely
highlight for me.
fascinating. It's because it's like in anything, there's always human error. Right? So Happy Path, 75 grand, they're running the play, and you're just kind of like a digit off, like 27043, 27037. Do we know, is that like his buddy's house, or was he sitting on that? Because that's what they'll do. They'll sit on another mailbox or porch, they'll wait for delivery, and then they'll quick grab it.
Yeah, we don't know in this case, but assuming one of those methods, right, trying to, at a minimum, hide this from his spouse. Yeah.
Yep. No, I think it's one, love Michelle already.
Yeah.
Don't know her. But I think it just creates this, like, how human this all could be. Look, I'm a wire fraud victim. It became really human in the Cronkite household when I had to testify for the Department of Justice. Like, this is a piece of it. And I love the fact that, you know, he just pivots like, I don't know. What are you talking about? So, all right, what happens next? I can't wait.
Yeah, right. So again, just to keep the story on track, right? Stan receives $250,000, cuts it up in 4 cashier's checks. Theodore received his check. His wife grabbed it and was able to send that back, right? So we're still talking about some of the laundering of funds. Well, we're 5 weeks out of the closing, right? Stan has received the $252,000. And he decides to call the title company to share that he was the recipient of this fraudulent wire. We'll talk about that coming to light moment here in a minute. But Stan decides to come forward and share the fact that, hey, I received these funds and this was a fraudulent wire transaction. Stan's explanation, right? We talked about unwitting money mules. We talked about witting money mules. Stan's taking the stance of, hey, I was unwitting in this case. I have this friend. Her name is Morgan, and she instructed me to receive these funds and distribute them for her. Right? And Stan goes on to explain that Morgan is a TikTok influencer with 2.5 million followers. Right? 2.5 million followers of TikTok, and he's frequently moved money for her. Right? Over the past 4 years, he's been moving funds similar to this transaction here in the same way, taking the funds in, chopping them up, sending them to people that he's instructed to do so. His explanation, and this is a direct quote from Stan, in order to hide income from her management company, she's using Stan to distribute these funds to dozens of other actors, right? So if you can't tell, I'm not convinced he's unwitting, but this is his story, right? And Stan also shares that, this isn't the only person he's doing this for, right? Morgan's one of several, and he performs these services for people who don't want to deal with banks, who need to send money overseas, or they need to buy Bitcoin and simply don't know how, right? So Stan's explaining here, hey, title company, I didn't know what I was doing, right? I received this money. I'm going to come out here and tell you exactly what happened and share, my story of why, I'm not at fault for this transaction, right? I'm unwitting. So in addition to the checks that he was instructed to send, right, we still got a remainder here. Stan takes his cut, right? Very unwitting of him to take $14,000 from this transaction and send it to his personal account over 2 transactions. Additionally, Morgan instructs him to send out almost $25,000 via Cash App to a number of wallets here, and you can see the breakdown there. So right, not only are they chopping them up via these cashier's checks, sending them around the country, we have multiple transaction types out of this one account, right? So Cash App has been very frequently used and been brought into the news here. And Tom, if you want to jump forward, we can talk about that and then how this is being used by money mules to continue to launder funds.
Yeah, this Telegraph Silk Road founder was in the news a couple weeks ago, potentially being let out of prison. But you're right, unfortunately. And the same thing with crypto. And I'm not indicting crypto, but some of these alternative ways to communicate in these alternative, rails of payment optionality. Cash App's like a peer-to-peer. Bitcoin is obviously cryptocurrency. They're coming under scrutiny because of the lack of what I would say like common sense visibility into, hey, I built this thing, I built the peer-to-peer payment system, but it's used for nefarious purposes. So the founder's kind of in the crosshair now with okay, you either know or you should have known. We need more guardrails around this. Same thing with, like I say, with some of these other technologies. I think the founder of Telegram was arrested in France a couple months ago because that's how they're communicating on an encrypted basis through these scams. So, all right, what happens next, man?
Yeah, and just to riff on that, right? It's not to indict the communication platforms or the funds transfer platforms, right? It's just the nature of this type of crime, right? And this type of laundering, and you're seeing this on a global scale, right? You heard Aaron, you heard us talk about it and kind of outline one of those fraud rings that was caught. This is impacting every nation around the world, right? We see regulation popping up in the UK, in Australia. You see, on Capitol Hill, a number of people being called to testify about this problem. So we may be behind it now. It's moving in the right direction, but right, this is a global scale crime, and just didn't want to underscore that. So want to talk about Stan's coming to light moment. How did we get this information, right? Why did Stan decide, what, I'm going to come forward after 4 years of transacting on behalf of Morgan? Well, some weeks after the closing, right, I think it was about 5 weeks, Stan went into his bank to send out one last transfer of $8,500, right, to one final person that Morgan instructed him to do so. His bank would not allow him to send it out of the business account, right? For whatever reason there, and unbeknownst to him, is very likely flagged, but right, they would not allow him to send it out of his business account, so he transferred it to his personal account, went back to the bank, and attempted to make that final transfer. Well, at the bank, in person, standing there in front of a teller, he goes to send the $8,500. Somebody taps on his shoulder, turns out it's bank security, and notifies Stan that they are investigating the initial $252,000 transaction that he previously received. He's not going to be able to send out this transaction because they believe and ultimately know that he's part of a larger wire fraud scam. And this is, again, Stan's coming to light moment. This is when Stan probably starts to shake in his boots, right? He's been doing this for years, and he's finally confronted, in addition to receiving that check sent back from Theodore's wife, right? This all starts to come to fruition, and I think he started to really feel the pressure. So yeah, that's Stan's coming to light moment, and why he elected to bring this out to the title company. Stan then, again, kind of unraveling the story and backing up his unwitting position of hey, I didn't know what was going on. He immediately begins to try to contact Morgan and ask her, hey, what's going on? Why am I getting told that this is fraud? What I forgot to tell you is Morgan actually also has a debit card on Stan's account. That was a fascinating part of this, right? Morgan's very involved in this 4-year relationship. 4-year relationship with this individual he never met in person that he also provided a debit card to, right? So he contacts Morgan. He starts to reach out to the recipients of the cashier's checks to try to get them back to say, hey, I'm the good guy. I'm going to help this title company out, right, to help protect himself. And then he also contacted the title company. I was privy to about 10 hours of phone calls between Stan and the title company as he shared his story and provided all of this evidence. He also shared additional contact details, phone numbers, to show more, or to outline who Morgan was and why he was being told to do so. So that's kind of the story of Stan, right? And how we acquired this information. Again, we wanted to break this down for you. Everybody here is aware of mortgage payoff fraud, is aware of buyer cash to close fraud, seller impersonation, vacant lot. All of these scams are top of mind for you all. But what you don't know is the back end, right? How these funds actually get laundered and the challenges that this causes for federal law enforcement or for any law enforcement agency to prosecute, right? As I mentioned earlier, every victim that I work with, the hundreds of victims we work with a year to recover funds, whether they're successful in getting those funds back or not, wants justice, right? Wants to see the individual that received those funds go to prison, some action taken against them. But ultimately, that's extraordinarily challenging. And
yeah. So then you ultimately found us. Do you find us online, or what? How did you find us?
So that's a great point. So, Reddit, you got to love it sometimes. Sometimes it's rough, but man, the way that gave me my initial path was on Reddit. I kept Googling what to do. And through there were several actions. Someone, multiple people had been through this and they just said some things you had to do. And so the key thing for me was, I contacted the FBI field office in Seattle. I tried to reach out to the Secret Service field office, but once again, this is later in the day. Someone picked up from the FBI, and they couldn't talk to me. So the general thing through this transaction was almost anyone I would talk to couldn't talk to me, with the exception of you all, because from their perspective, I think they deal with criminals all the time. So how do they know I'm not a criminal? Like, it's
They
not
say
like
in the IC, they said go fill out an IC3.gov report, right?
Right.
Right. Yeah.
And for me, that was the most important thing to do. Like, out of everything, filling out the IC3. So I was actually pretty stoked. It's like nice to see sometimes when when government stuff,
there's a rail bill. Yeah, there was a rail bill.
Yeah. And if they hadn't set up that IC3 infrastructure, that was like the key thing in everything that I did, because that report I could fill out myself. And that was something I could reference as sort of, I'm not a lawyer, so I don't know the right terminology. Sure. So maybe not a legal document, but like a case number as a reference to everything else. Right. So I did that. I even went to the point of contacting, I don't recall offhand, but there were about 3 or 4 government places I went and filed electronic complaints. I even went as far to do the Consumer Protection Bureau or something.
Yeah, CFPB. Sure.
From the bank that held the criminal account.
Sure.
And that was Bank of America. And actually, that was another key thing. Bank of America was amazing, because someone from there high up in their customer service reached out, and they're like, we can't really talk to you because you're not a customer. But, this is typically our process. We deal with law enforcement. We do whatever they ask. And then we form, because they want to be fair to everyone, because they can't validate that I'm not a criminal.
No,
So
and they have bank secrecy and Patriot. There's a lot of restrictions there. Yeah.
So from that, I think they were 2 key things, like Bank of America doing their due diligence, and ultimately, that was another part of it, right? Because they don't have to do anything, right? They could just say hands off, like a wire transfer by definition.
Yeah,
they don't.
That is a no money your problem. That is a stance they could have taken, and I'm glad to hear they didn't.
But what was pretty fascinating, especially when it comes to the topic that we're after today, is that ID documentation, right? So the fraudster showed up in this office with a passport, and when that passport was analyzed, the experts essentially said, like, this is one of the absolute best we've ever seen. This is a document that I am not surprised nobody could have told the difference between a real one and a fake one. And that is what really caught our eye as we continue to think about how we can develop technology and support folks to prevent these sorts of mistakes and misidentifying a document. But there's also some things about this that make it really hard. And I'll let Luis take this. So Luis, when you looked at this document and you saw it, what kind of stood out to you in terms of why they were successful with this for the fraud?
Yeah, for sure. I definitely remember seeing this, and it's definitely high quality. I mean, the system, looking through this, the way this was picked was very strategic. It's very common for a lot of verification vendors to actually publish what states or what countries they support and what passports they support. This passport here was picked, I believe, strategically, because it's one of those passports that not a whole lot of vendors out there actually support. It's a foreign country. It's Venezuela. It's a little controversial, and so it's a high quality document. But it's something that even some of the best technology out there has a hard time deducing, because we don't have access to the barcode. We don't have access to the government data. And so it's really just relying on the visual analysis, the template analysis, and any data that we might have in the back. And so this was really a strategic move by the fraudster, honestly, to provide something that was less likely to get flagged by a system just because it's one of those odd passports.
Yeah, that's so fascinating, because it is true, right? We get asked all the time, what countries do you support, or how can you use it? Well, in this scenario, and just for the listeners out there, this wasn't even a certified customer that went through this experience, but ultimately, when it did occur, the fraudsters are just getting that strategic and that smart. And to Luis's point, there are a lot of different identity verification solutions out there, and systems and tools that you can utilize. And a lot of them do publish online, like what countries or states they are really good at or they'll work with. And so the fraudsters did their homework in this case. At least that's our hypothesis. And they said, hey, here's a country that we don't think anyone's going to be able to verify. So therefore, it's going to be me versus this team. And when I walk into the office and I'm holding this document plus a visa and the confidence that I want this cash and I'm here to collect it, they're going to have a lot harder time being able to determine whether or not it's fraudulent, and certainly no additional tools to be able to support them in that instance, which is, yeah, pretty fascinating.
Again, I'm going to take you back to spring break of 2015, where Sun Title was asked, here in Michigan, where Sun Title was asked to participate as title and escrow closing agent in a commercial transaction here in the city limits of Grand Rapids, Michigan. It included a gas station that had multiple different liens on it, unpaid unemployment tax liens, federal tax liens. And as part of the purchase agreement we received a certified check, this exact check, for $185,000. The purchase agreement called for $180,000 EMD. They added $5,000 for ancillary fees that may or may not be collected in the transaction. And then once due diligence was complete, the purchase agreement said that the $180,000 of the $185,000 would go to the seller as hard, non-refundable earnest money. Okay, so what happened was we deposited this check. I want to show you some dates here because this was our lesson learned on cashier's checks. Cashier's checks are not good immediate funds. Okay, it takes a minute to clear through the Federal Reserve. We deposited the check on 4/8. You'll see that scribble down on the bottom. And then on 4/15, we received notice that the check had bounced, notwithstanding, or didn't clear, came back NSF, notwithstanding that our large institution where we had deposited it said there were no holds and the check had cleared. So there wasn't necessarily negligence on our part when we took it in, but it was just a gap that the fraudsters played on the timing of it coming back and then us subsequently wiring money before we got this notice on what is the 15th to wire funds. Here was the speed at which the information flowed to the bad actors. So what we didn't know is the money was sitting in an escrow account at our local branch, let's say here in Grand Rapids, large institution, and we were being asked to wire money to a Bank of America account with a Manhattan address. The picture you see here is CCTV of a professional money launderer by the name of Antonella Mendelsohn, Dr. Mendelsohn, she calls herself, and her husband at a New York bank branch moving our money that was received into the account that we had sent it to. But look at the timing. She received at 9:42 the instructions on what to do, and then walked down to the branch at 12:01 that same day. It was coming in real time. She's a German citizen and flew in the day before. And you can see the email, and this came out of the federal investigation I'll get to in a minute, where she was instructed to do a series of things. Here's a couple wires, here's a cashier's check. She took 20 or 25,000 out for her money laundering fee and ultimately moved money into the state of Texas. So the main point of initiation to launder the money was Antonella Mendelsohn's control of what was called a Vicken Traders account, this Vicken Traders at AOL. And this and something else I'm about to disclose unlocked a federal investigation as to who was ultimately behind what was a $3 billion scam by the Black Axe. So where'd the money go? It headed down to Texas. Dean Morgan was an insurance broker, was actually a real estate broker, and took a portion of those proceeds, a large portion, and put it as a down payment for the purchase of a piece of property in Texas. One of the main other bad guys, I'll say, is Perry or Perez Cortez, who is an attorney using his trust account to launder hundreds of millions of dollars through it. And when companies like us that were defrauded that would initiate contact with the bank that he was using, he would rattle the attorney saber and say, look, you can't freeze my account. You have no due process. Unlock it or bad things are going to happen. And Chris, I know you're a member of the bar. I'm a member of the bar. That was a highly effective strategy for this syndicate, is to have an attorney running money through an attorney trust account with the power of a seated member of the bar. And they caved almost every time. So we ultimately litigated for 2 years in Bell County, Texas. We sued everybody that we could and named them to the lawsuit. You can see here, this is the first page of our pleadings. Perez Cortez, his law firm, Dean Morgan Agency, and a Mark Hopkins. And a Mark Hopkins was an individual that we believed was a commodities trader that bought a container of what I believe was aluminum ingots coming out of the Middle East. So the money just splintered into multiple different forms of either personal or real estate once they received it. We settled with Mark Hopkins, our final defendant, to settle the lawsuit. We worked with his counsel. This would have been 2 years almost to the day, so spring of 2017. And then I received a call from the Assistant U.S. Attorney Patrick Scruggs out of Tampa a few months later. And Patrick was very interested in our Bell County civil litigation, asked me a ton of questions about my interactions with these defendants, whether or not I traveled to Texas and met anybody face to face, or did we take depositions, like what did it look like? And then I finally said, Patrick, why are you really calling me? All this is public record. I'm a member of the bar. You're a member of the bar. And he said, well, I'm really calling about this Mark Hopkins guy. And then he leaned in and started asking very specific questions. And finally I said, man, what's the deal? I've never met him. We worked through his counsel. We had a sealed settlement. I got payment to release him. And then finally it came out that there was no Mark Hopkins, that Mark Hopkins was an alias of an individual by the name of Ikachuwu Amadi, the defendant here in the middle. And he and his brother Desmond to the left were running essentially a chapter or a syndicate of the Nigerian Black Axe running in North America. If you Google them or Nigerian Black Axe, you'll see there was a press release by, I believe, the Toronto police, where they say they were responsible for roughly $3 billion worth of cyber attempts over a 3 to 4 year period. What's interesting, though, is this thing took a twist, right? And the reason why Patrick was calling me is he was about to send me a grand jury subpoena because they had picked up Perez and the other co-conspirators and were working up funnel in this investigation to extradite Desmond to the United States to stand trial. Prior to that, there was an interesting article that came out by the FBI that announced this kind of cyber money laundering takedown. And as I saw this in my feed and I started to read it, I'm like, wait a second, these are all the guys that were involved in our thing. And then look at the bottom, this Priscilla Ellis received a 40-year prison term. She was ex-military and behind the scenes was running much of their financial infrastructure. She was being held in a local jail, and she was being, she had already been convicted and was essentially being transferred from local to federal penitentiary. She solicits another inmate to help her hire a hitman to murder several witnesses who had just testified against her in her trial, to prevent them from testifying in future trials for the people that she was working for. So think about that. She's already been tried and convicted. She wants to murder witnesses on upcoming trials. So the FBI poses as the hitman, gets all the information recorded at the jail, and then she adds 65 years to her prison sentence for for attempted whatever. I don't know what the federal charge is there. Specifically, if you dive into it, she ordered a Colombian necktie, which is where you lacerate the throat, pull the tongue out to signal to anyone else that dare testify not to speak. So I had read this at the time that Patrick had called me, and I said, Patrick, you undoubtedly read the bulletin and the announcement. I really want nothing to do with any of this anymore. I didn't know who we were dealing with. We received what I thought was enough back. We paid a lot of tuition on this thing. And I was not, you can't avoid a federal subpoena. So for those of you that receive one, don't ignore it. In fact, when Patrick called, I said to my administrative assistant, she's like, do you want to take the call? There's an assistant U.S. attorney. I said, I can do that, or there'll be a black Suburban showing up in a few minutes. So it's probably more efficient that I take the call. I was able to, I actually hired counsel to protect me during this process. We were able to, by way of an affidavit, what's called a verified affidavit. I didn't have to show up live for the grand jury subpoena and grand jury testimony. They used a very extensive affidavit that I had filed with the Department of Justice. But I was required to testify live and testified under the protection of the FBI, and it was a 2-week trial, absolutely incredible. Two of us, there were 8 victim witnesses, 2 of us were in the title space. The other 6 were elderly women, recently widowed or divorced, that they bilked in romance scams. So for those of you that may or may not have heard the full story as to why Certified was created, on my way back to the airport with my protective detail, I asked a simple question that I knew we were on the right track. And I said, look, that was incredible, something I'll never experience, something I never want to experience again. But what keeps you up at night? And this was an FBI federal cyber investigative team member. And he just simply said, without thinking, social engineering. He said, what these people are doing to get other people to be convinced that they're talking to the right person, or that this cause or this opportunity is real. He said, that's what's concerning to me. Awareness is really interesting, and Matt, I'll ask you a question on this, but we're doing better on the margin, but still it's not acceptable that roughly half or a little more than half of consumers going into the transaction are just simply not aware or adequately aware of the risk of wire fraud. Matt, you spent your career developing a framework to help victims recover funds. Is it similar? I mean, in most victims that we see, they weren't aware. It wasn't oh man, I was aware and then I clearly made a mistake and now I need your help. They just got taken off the field by something that was completely foreign to them. How do you see that?
Yeah, it's because of, I think, the somewhat complicated nature of a real estate transaction. It's when you look at sort of all the other kinds of business email compromise, whether it's CEO impersonation or invoice injection, things like that, those are really targeting businesses. Whereas this is targeting individuals, and individuals don't think largely that anybody's looking for them. And most aren't as aware of the fact that emails are very easily compromised. And so as a result, they think that their emails are secure. So then therefore it's a sort of perfect storm of nobody's looking for me. I'm just this average guy buying a house. And also, I'll also add the sort of like, dual concern as it relates to this type of transactions is you don't know if the BEC or the compromise is on my side as the buyer or seller, or on my realtor side, or somewhere else along the chain. And so when you're operating in an environment where most of your communications are via email, using web-based email providers, that is just a recipe for disaster, quite frankly.
Now, why do we need to care? There's a ton of equity, guys. We're going to have a repeat this year of what we had the last couple of years from likely the number of transactions, interest rates, right? But we're also going to continue to see price appreciation. If you look at the stats, most first-time home buyers are receiving a backfill from somebody, mostly their parents, to kind of right-size the mortgage rate. And there's still 20 to 25% of all transactions are taking place in cash. So there's still just an absolute ton of money moving within the real estate sector when the refinance activity starts to kick in and that equity is unlocked and monetized through new mortgages and cash outs. We'll see yet another wave of cash out refinance fraud.
When you're talking about digital payments tools like the earnest money tool itself, it's also like I view it as the introduction of a new client to the title agency, right? They maybe have not interacted at all up to that point. Maybe the title agency has received a purchase contract, maybe not, but it really kind of introduces that new customer to your entire ecosystem of technology. Hey, we're going to get them comfortable early on with logging into an application and sending payment, and they become comfortable throughout the process that's going to continue down that path.
No, I agree with that, and to maybe pull that thread a little further, and I've said this before, I think the industry from a title perspective, with affordability being such a headline and the cost to open up a transactional envelope and close it for buyers and sellers and commissions and mortgage loan origination fees, and title insurance has this big fee but no claims history like other forms of insurance. Like we're all kind of under a brighter light right now.
Yeah.
I think the narrative moves from not just protecting home ownership rights or property rights in the United States, it's protecting the homeowner. It's protecting the consumer. And this is another tangible way with their life savings, and I think you bring up a good point. This is ours to lose as an industry that says, hey, we're here. Here's a part of what we do is safely receive your EMD obligation, and we'll let you know when we do. We all play a critical role, and I think this is the year, the industry needs this to be the year that we recognize this as a consumer protection issue. So you could say, okay, well, the title company was victimized. The title company was victimized in this case, but at the end of the day, the seller's mortgage was not paid off. And the transaction may not be fully consummated even though the buyer's funds came in and out of the escrow account. That's an everybody's problem. And the weight of that will not be erased on the consumer's shoulders, both the buyer and the seller, even though the title company was the target of the fraud. We can't lose that. Even though mortgage payoff, you'd say, well, that's a title company problem. It's an everybody's problem.
As you walk through that, right, and you start talking about the personal impacts, I had a call yesterday with somebody who just opened up their title company, just started out, going off, branching on their own, about to take a HELOC out on their personal property to cover a $200,000 loss. Right? I don't have to sit here and talk about how emotional and devastating the impact of these are. Y'all can understand that. But right, as we talk about the security, I appreciate Matt coming on, kind of talking about this new emerging fraud trend. Y'all, the fraudsters are going to continue to evolve. These new trends are going to continue to show up. If you've watched any of our recordings, if you've watched any of our To Catch a Fraudsters, looked at our white papers, the simple security measures have not changed. Right now they evolve, right? MFA is now changing, right? Two-factor authentication, because of SIM swapping, your phone number is now at risk for 2FA, right? So now we got to move to YubiKeys or maybe authenticator apps, things like that. But the core security, the basic security is still, that plus education, your strongest defenses, right? So continuing to pay attention to those, employ those, and educate your teams on the risks that they face. Again, as Tom mentioned, we talk about this every time. If you lock your door and your neighbor's door is open, they're going to move on to the next house, right? So again, focusing on that simple security, staying abreast to new changes, but ultimately education is going to be your biggest
When I look at this,
defense.
when you saw this stat, you got an advance look at this, Matt, before we published last week. What do you see on this graph?
I see that there are easy wins ahead by even just providing collateral or sort of documentation across all of, because you have multiple opportunities. You do have the real estate agent, you have the title company, or depending on where you are, the attorney and the lenders. They can all do more and provide this information. And it needs to be front and center for them. So the fact, and I agree with you, that I learned about it myself, the question is going to be is, did you learn about wire fraud, or specifically as it relates to real estate? So these numbers, while not wonderful, there's a lot of opportunity to grow, and hopefully over the next year, 2 years, as the attacks continue, as you mentioned, when things are flat and dollar losses remain at an all-time high due to this, that just tells me that they're getting more and more successful, and that will continue to happen. So trying to go to the old adage that cyber is the ultimate team sport, you need all of these different players to continue to drive home the message. It shouldn't just be one of these groups. It should be all of them telling their folks, and then also providing them with tools so they're not sending communications via email. So it's not just, hey, there's a problem in email community, but good luck to you. There has to be more to it. Just notifying of a risk, but then actually actioning something to protect the average person is hopefully going to continue to increase.
No, I completely agree with that. I'm even an advocate for a state mandated disclosure about wire fraud, that anybody representing or even collecting a fee relative to the either agency or loan origination or title premium or closing. I mean, we're federally required to identify lead-based paint. Most states require a seller disclosure that fills a gap between a home inspection, but yet their entire life savings is completely at risk, and they're essentially Googling or going to AI when they see a news article or they hear something in passing about it. And I agree, that should be just flat across the board. All of us are trying to get to them the quickest.
And as I kind of reviewed our, those 16 cases we've had this year, two commonalities in the kind of emerging social engineering tactics that these folks are using in this fraud type were almost common across every one of them, right? And I really think it's important for everyone to know these and be aware of these, because again, it's very convincing, right? And that's where the social engineering stems from, how it starts, right? The first one is something we've been talking about for a while. Tom, I recall you doing, at conferences using spoof card, right, and spoofing phone numbers. One of the commonalities that we've seen in these cases is you receive a phone call, right, random phone call, right? We all get them. This one has, your fraud department listed on, your bank's fraud department listed as the name, right? The number looks the same, and the person on the other side of the phone will say, hey, look at the back of your card. It's the same phone number, right? Using that as a validation point. Which, to anybody, right, you don't have my card, I'm looking at my card, how did you make this happen, right? That's a pretty interesting validation point that they're using in this. That's a little different than the BECs that we typically see. The other commonality that this one I think everybody should be aware of and you should warn your teams of is them reading your account number back to you as a validation point for who they are, right? To most consumers especially, maybe not as much businesses, but probably the majority of businesses, you think your account number may be a secure validation item, right? It's your account number, right? Why would somebody know that? Well, every check, every invoice you send out has your account number. Essentially, what I tell victims, and Matt, you can correct me if I'm wrong, I always tell victims to assume your account number is publicly available information, right? Again, you are sending that out to hundreds, if not thousands of people in businesses a year. It's exposed. So when somebody reads that back to you, a lot of these victims in hindsight have obviously looked at it and said, wow, I can't believe that. But they're like, oh, wow, my entire account number. Your phone number that you're calling from is on the back of my credit card. Sounds good. Let's go. Right. So it's a really interesting part of that.
They're calling to help them. That's the thing. Like,
yeah.
They're like, hey, Nate, I'm just calling to help you protect your money.
Mm-hmm. Yeah. Yeah. And they do a great job. I mean, in a lot of these frauds, but again, specifically with a fraud department, it's not just one actor. Right? They say, oh, I'm in the XYZ department. You actually need to talk to Tom. He's in the bank fraud security ultra department. And you get transferred over to somebody else. And they know everything you've just talked about. They know all the same details and they talk to you. and they transfer you to the next person, right? So all of this validation, again, common across all of the account takers that we've seen, is just a really kind of evolved social engineering tactics.
I'm going to put you guys on the hot seat one more time with a question. In a few words, if you could get a message out to the industry, to your referral partners and your customers on the issue of just preventing wire fraud, protecting the transaction, what would you say to the industry? What would you say to your referral partners? And what would you say to the consumers? David, I'll let you lead off.
So when you look at the title insurance industry as a whole, like I've kind of narrowed it down to 4 threats to our industry. We're dealing with notary fraud, like that's one threat, right? We're dealing with the sales of vacant land, right? These fraudulent sellers that are out there. That's one set of challenges. Hard money, can be a big challenge in our industry. We deal with that in California, right? That's a big challenge. These are all higher cases of claims or exposure. And then the last one at the end of the day is wire fraud, man. And to me, wire fraud is probably on the forefront to that. My biggest advice to anyone is championing a company like yours. You're really a security blanket for all of us, to adopt, spend the extra money, go through the extra steps, verify 2-3 times. And yes, you may have internal personnel that you can depend on, that you can trust, that are making the calls, right? That are being proactive about this approach. But there's nothing like having a company like CertifID to help verify the wires as well. When we got certified, as soon as we first enrolled with you guys, like Lisa said, we stopped a $600,000 wire from going out. Now, did our employee also, was he suspicious of making that payoff? Yes, he was. But did it also not go through CertifID appropriately? Yes, it was. Right, so I, as a business owner, as a CEO, I'd rather have 2 giant flags raised, right, than me depending on the employee at our company. Can I depend on them? Yes. Can I trust them? Yes. Are they the best at what they do? Yes. But guess what? I would rather have a redundancy there, protect the company, protect the consumer, the buyers and sellers in this process. So that's why we have CertifID.
No, love that. Lisa, any parting thoughts to...
Yeah, every single day we face challenges regarding wire fraud. These fraudsters are good. They get better by the day. The security of our escrow funds is our main focus. And I procrastinated. You heard so many stories about, the wire fraud programs. What scared me into finally making the phone call, I saw a certified webinar. Ali Faith gave it, and she just shared so many examples of the horror stories. And I got back to the office and made the phone call, and it helps us sleep a little bit better at night. So it's scary. Wire fraud is scary, and I just recommend to everyone, just sit through one of those webinars, or if you're lucky enough to see her in person like I did, and take the step. It's worth it. I mean, first week alone saved our company $500,000 just about. So that literally would have shut our doors in a market like this. So I'm thankful. Yeah.
Well, we thank each of you for the time. I put a QR code. If those of you that are listening want to start the journey with CertifID and our team, I can tell you that our hearts are just like yours. We're trying to make the industry a safer, more transparent, and just better place to conduct business in light of the existential threat that we find ourselves in with these bad actors. So with that, I'm going to sign off. Thank you for attending this installment of To Catch a Fraudster. Lisa and David, so well done. Thank you for the courage and the candor of today. It really does mean a lot.